factory activity expands across most of Asia, but has China in particular turned a corner? Welcome to Market Insight. I'm Leah Mishkin. China's factory activity grew at its fastest pace in about 2 years, according to the Caixin S&P Global Survey, which showed activity rose to 51.7. But that contrasts with official data last week that showed a surprise fall in activity. India, meanwhile, factory growth dipped but was 57.5, highlighting the continued strength in that economy as the market there hit a fresh record high today. To help us unpack the data, we have Janet Mui, head of market analysis at RBC Brewin Dolphin. Janet, welcome. Thank you for being on the show. So let's begin in China. The survey shows the boost came from production gains and new orders, particularly at smaller firms. Markets failed to take notice. What's going on there?
Good afternoon, Leah. Thanks for having me. I think so this set of data contrasts with the official PMI measure, which actually dipped into contraction. So I think markets were a little bit unsure what is exactly the underlying momentum. But I think overall speaking, if you interpret today's data, which focus on smaller companies and more export-oriented companies, I think this is overall good news. And it also shows that the global manufacturing sector is in a recovery. So you're not just looking at China, but in terms of the Euro area, UK, we are also seeing a pickup. So I think overall speaking, this is something to be positive about with so many negative news in China nowadays.
Right. And the IMF last week lifted its forecast for Chinese growth, but this market remains a pariah for international investors. Where do you sit?
So in terms of the growth outlook, I mentioned that there is some green shoots because the Chinese government has been actively stimulating the economy. And I think we are going to see more of that going forward. But ultimately speaking, I think for international investors, it's not just the growth outlook that matter. It's really the political backdrop, the flows of capital, the returns of the companies in that region. That really matters. And on that front, we're still cautious on China because we view that the political and geopolitical environment is not favoring that country in the short to medium term. So we think that we're still kind of on the sidelines in terms of investing in China.
And I also wanted to get your take on India. Indian shares hit lifetime highs. Some put it down to the election. Is that the reason?
I mean, Indian stocks have been on a tear before the Indian election. And I think this result, the landslide victory by Modi, is just a confirmation of the continuity of the government. And it just shows there will be ongoing support for pro-growth policy, particularly in terms of structural reforms in terms of the labor market and land acquisition. So I think this is something that analysts like to see. So this is just a further catalyst for the stock market after the election.
And we'll get those official results on Tuesday. So which would you choose at this point? Chinese equities, which are cheap, or the relatively expensive Indian equities?
So in terms of the regional allocation, I think our preference would be Indian equities. Because I think in terms of the politics, India is viewed as a more stable and reliable partner to the Western allies. And that I think is very important for international investors. And I think in terms of the ongoing diversification of supply chains and shifting away from Chinese production, I think India is a major beneficiary. And also think that in terms of the demographics, really long-term structural factors, India is in a more favorable position compared to China. So I think on that front, Indian equities look like a better bet for the long term.
Moving now to the Eurozone, though, the European Central Bank is set to meet this Thursday. Do you think the ECB has backed itself into a corner by promising a rate cut this week, even as inflation is rising?
Potentially. I think the officials are likely to stay cautious after kind of promising a rate cut later this week. I think they would be guiding for maybe not expecting any more back-to-back rate cuts. I think they will be more cautious after the recent reacceleration in inflation data. I think you're probably right. They probably cornered themselves into pre-committing to a rate cut this week, but I think they probably would be very careful in guiding that going forward.
Thank you, Janet Mui, for your time, head of market analysis at RBC Brewin Dolphin. And that's Market Insight. To dive into these stories further and more, head over to Reuters.com.